Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 26th of January. Starting off with 7 Digital, we're sort of second time lucky with that resistance line there from back in July, so we broke that at around zero point 0.5, a little rally there, but looks like we could have a proper move this time, a sort of V-shaped bull flag at the lows, which seems to work quite well. It worked yesterday on global petroleum, and that bullish divergence line in the RSI window, so multiple tests of that suggests that the momentum is building, and at least while we're above the 50-day moving average at 0.5, we could head up to 0.83 initially over the next month or so, which is the falling 200-day moving average, best case scenario target here, up to 1.1 pence if indeed that post-October basing for the shares is the final support zone for the stock. Moving along to 88 Energy, which I know has its many fans. See whether the shares are finally going to live up to their the high expectations. Here we had, I suppose, a break of that resistance line there, 1.5 pence from September, testing it as new support and what I call a V-shaped bull flag breakout that we've had since then. So the view at the moment is the longer we stay above the initial January resistance of 1.85 pence, the greater the chance of a move towards 3.5 pence, which is an early 2021 resistance line, top of that triangle from the spring of last year. And that target there could be hit as soon as the end of next month, or maybe going into the first part of March. Active Energy, stock I normally shy away from, as you'll see, and you'll see why from the daily chart. So a bit of a nightmare here. We had a full storm breakout there, but a bullish divergence, not really much follow through. So just pushed through the 50-day moving average back in November. Maybe a second chance here with this bullish divergence line here, and the chance of maybe a break of the 0.2 area, taking the shares up towards the gap there from last month around 0.28. So if you're aggressive, then I suppose you'd be going in around current levels with a stop loss below 0.15 or 0.14. Otherwise, a break of the main 0.2 pence area could be something to look forward to on active. Moving along to a stock which is the other end of the spectrum, Beowulf Mining, was just the battle here to try and work out how big the upside may be. Obviously, at the start of the week or last week, we had that pullback, but above the floor of the channel there at the September channel there at 13.5 pence, looking to 24 over the next 1 to 2 months, or perhaps even sooner, maybe by the end of next month. A very strong looking breakout there. Saw somebody tweet about the following stock, which I think was quite an imaginative thing to do. Here at Deltex, we've got this island reversal. So the gap down at the beginning of the month and the gap higher here at the lows or from the lows. RSI went really low, went to the lowest since, I suppose, for a year or more, down to the 3, well, actually, no, probably 2 or 3 level on the RSI scale out of 100. So understandable why there's a gap higher. If you're cautious, maybe wait for a proper end-of-day close above the 50-day moving average at 1.4 pence, and then would target 1.8. But obviously, this stock is not the king of liquidity, so it may not be the right thing for many. But at least here we have it highlighted and something to watch out for. On to Europa, which I drew sort of a bicycle spokes worth of lines here, but interesting that they have the 2 gaps up, unfilled gaps to the upside for Europa, and initial target here up to 2.1 pence or so, which is one of those resistance lines. But the big target is the late June resistance line projection at 2.8 pence, which could be hit over the next 4 to 6 weeks, especially while we hold above recent support at 1.7 pence. Moving along to a stock I mentioned and covered it yesterday around midday, or I think it was still below 0.7. But anyway, wherever it was, we've broken that big neckline resistance that we had from April, which we were expecting to happen after the V-shaped bull flag that we had in place there. And current situation is that consolidation near the top of yesterday's range, so above 0.8, looking for a best case scenario target here is at 1.3 pence, which is a March-April resistance line projection. So 1.3 the best there, while we're above 0.8, and it would be disappointing if we didn't get that kind of target. Moving on to Helium 1, which has obviously had its ups and downs, currently having a few ups. So just thought I'd highlight it here as bouncing around the just below the 10 pence level, which was the floor of the August gap, above 10 pence. Still looking for a retest, or now looking for a retest of January resistance at 15. Best case scenario target up to around 20 pence at the top of the August rising trend channel. That's maybe a couple of months away, but I think the main plus here is if the shares remain above 10 pence. Moving on to a stock which I don't think I've ever looked at before, because I thought it was probably sounded rather boring, but I think it got a newspaper mention as well. With the chart here, it looks quite easy, which is normally not a good thing to say, but here we've got a situation where we've broken a line of resistance, which we did effectively at the beginning of the week, breaking that 50-day moving average as well at 422, and above that looking for a retest of the best levels of last year towards the sort of 560 area. Overall, the pattern here looking pretty strong in the sense that we've got a rising trend channel from back in April, heading towards £6.20, £6.30, and ideally that happens by the end of March. The other point to note is that we've had the 50-day moving average crossing below rising 200-day line, so the next time they cross it, it'll be a golden cross, and the run-up to such golden crosses tends to be a very strong part of the cycle. And just to finish off the good technicals here, got a bullish divergence line there in the RSI window, so that should add extra momentum to the upside. We've seen those lines power many moves in the positive moves in the recent past. One of the better signals that you can have around the place is a sort of 2-day, 3-day bear trap, and that's what it looks like we've had at Revolution Beauty with the dip below £1. The current view is that while we're above that, the previously broken resistance support line there from back in October at exactly 106. Then we could have further upside, hopefully up to post-December resistance in the £1.30 area. So a little setup there, nice little setup there for Revolution Beauty at the moment. Stock, it's always worth looking at stocks just as they sort of open in their opening weeks on the market. And Technology Minerals looks like it's shaping up quite nicely. Almost reminds me a bit of Ben's Creek. We've got that rising trend channel there from the beginning of trading in November. Top of the channel looks like it's heading towards 8.5 pence, and that's valid at least while we're above the initial January resistance of 4.3. So it's quite well, decent risk reward there. Above 4.3, looking for 8.5 or so over the next 4 to 6 weeks. Finishing off with Tower Resources, and here we're seeing there's two positive things. One is the end of day close back above the top of the the bottom of the gap down that we had earlier in the month. We also had a key reversal higher yesterday, so that was a decent entry, I suppose, versus the open today around 0.28, something like that. What will be the next signal would be an end of day close back above the top of the gap there at 0.36, and that could then take us back towards the best levels of November, 0.5 pence plus over the next 4 to 6 weeks. So looking quite encouraging there. The other point to note is in the RSI window where we've got the lower low but the higher RSI trace, so that is actually quite impressive as well as a bullish divergence feature. That's it for me today. More updates tomorrow.